Right. My online participants, can you hear me? Nuska, hello, good afternoon. So we are going to start the lectures now. Hope you can hear me now. Yes, thank you, Nuska, for the response. And right, let's start with the lecture now. Last week, our very first day, the session number 1, we started to do the CIMA, the P1 discussion about the content called additional cost accounting method. Under that, we completed page 1 to 13. So we done with that chapter, right? So, yes, sorry. September intake? Yes. Yeah, it's the class. Are you involved today? Okay, welcome, welcome. Did you collect the textbook? Okay. You paid, no? That means you can collect this textbook. Can you go to the where did you pay this? Can you go to same place and ask, I need this textbook? Yeah. Tell the CIMA P1 textbook and they will tell you, right? Okay. And then hope Nuska, you collected the textbook. If not, please collect it as soon as possible. CIMA P1 textbook. I mean the cute booklet. The last week we discussed about the explanation of CIMA P1 given traditional cost accounting, modern cost accounting method. Under traditional cost accounting, we discussed about absorption costing method, marginal costing method. Also under modern costing accounting method, we learned ABC method is there. Also, we have to learn the throughput accounting under that. So like that, we gave the very brief introduction about that. Also, then after that, we discuss about the each cost accounting method, how we should do the profit calculations, which is called when it comes to traditional cost accounting method. Under that, we have a two profit statements called absorption costing profit statement, marginal costing profit statement. Also, when it comes to modern context, we call ABC and throughput account. We didn't touch with that because we had to learn in the separate lesson. Also, under traditional cost accounting method, we discussed and we learned about how to calculate the OAR. OAR, we call overhead absorption rate. We learned the formula called total budgeted overhead divided by total budgeted output level. Machine hours, or labor hours, or number of volume produced, like that we discussed. And then we discuss about under absorption costing method, how to calculate the calculations called how to value the inventories. We call the closing inventory valuations. So under that we learn when you have a closing inventory, for example, under absorption costing method, we call the AC method. And we learn the MC method, we call marginal costing method. When it comes to absorption costing method, what we call under here, we have the method called full cost of production, full cost of production method. Full cost of production method. Also, under marginal costing, we have to focus about only variable cost. Variable cost. These are the things we have to focus. We'll discuss and we wind up that area. Under full cost of production, what are the ingredients? We learn direct material cost per unit, direct labor cost per unit, direct expenses cost per unit, variable production overhead cost per unit, plus fixed production overhead cost per unit. So which is called in other word OAR. When it comes to the variable cost or marginal costing method, we discuss direct material cost per unit plus direct labor cost per unit plus direct expenses cost per unit plus variable production overhead cost per unit. That's it. We didn't touch with the fixed production overhead cost per unit. Why? Which is marginal costing. Yes. This is the P1 textbook. Last week, the first session, we covered the first chapter. Yeah, you see it. It's okay. We covered the first chapter and we did completed that. This is the chapter 1 we completed last week. So now I'm giving a small revise about that chapter again. So based on that, we can absorb. Then going forward, we can do the new syllabus, new chapter I'm going to start today, which is standard question. I'm planning to start the standard question part. The big, huge lesson. So I'm going to do this is the way, like that first traditional question we learn. New chapter, I'm going to start the standard question and variances. Very basic things to advance. So like that, after that again come to the modern cost accounting and other costing like that I'm going to do. So like that I'm going to cover. So now still I'm giving the introduction, whatever I discussed and completed last week about the small recap, right? So we learned the absorption costing method and marginal costing method. So AC method, this is we call the full cost of production method. So how to calculate the full cost of production? Direct material, direct labor, direct expense, variable production overheads, and fixed production overhead. This we call the full cost of production under absorption method. I think you are after foundation. Uh, ah, right. So you did foundation here. Oh, I think you right. And BA one. Oh, right. Long time back. Okay, right. It's okay. Right. We can recap like this. Okay. And when it comes to marginal costing, here the only difference is we are not considering the production. We call the fixed production overheads here. Only the variable costs are considered. This direct material, direct labor, direct expense, variable production overheads are taken into the consideration of the calculating opening inventory, production units, closing stocks value. Only these items are considered. But the thing is, I explained and we did under profit statement. After you allocate these production overhead things, separately you are going to consider variable non-production overheads. Variable non-production overheads. Why? You record to calculate the contribution. We all knew the contribution can be calculated. The formula called contribution equal sales revenue minus variable cost. Sales revenue minus variable cost. So when you are calculating the contribution under marginal costing method, before you take the profitability and all, we have to calculate the contribution first under this method. Once you calculate with the contribution, you are going to deduct the all total fixed overheads. We call the fixed production overhead, fixed non-production, all we are going to remove. Then you can achieve to the net profitability under marginal costing. Here, you to calculate the contribution, you may record to remove the variable cost from the revenue. No? So here, this variable production costs are allocated into the production, opening and closing inventory. But if you want to calculate the total variable cost, no, separately you are going to consider this fellow called variable non-production overhead. Then together, plus you are going to take the full variable cost and remove from the revenue to get the contribution. So like that, we concluded and we discussed and finished the last week this traditional costing chapter. Then after, we started to discuss about profit reconciliation. Profit reconciliation. Profits reconciliation statement. Profit reconciliation statements. Here, under profit reconciliation statement, what we did, you have a profitability or profit under absorption, profit under absorption. costing method. You had some amount like that. And you have a marginal costing based profit. We call profit under marginal costing. Marginal costing. Profit under marginal costing. So then in between here, middle, you have to have the amount called, what is that? Change in stocks multiplied with OAR. What is this? When you are calculating the profit under absorption method, we have OAR because it's a full cost of production. When you are calculating the marginal costing based profit statement, here we don't have a OAR. Because of this, you have a different profitability under each two methods under traditional costing method. Here, they want us to do the profit reconciliation. For that case, we are going to take the inventory changes. We call the changes in inventory. Your opening inventory minus closing inventory. We call the change in inventory. Into OAR, overhead absorption rate. Here, once you multiply with this amount, you get some amount here. Based on the profitability changes, we are going to do the reconciliation. We did that. For example, here, sometimes your absorption profit is higher than the marginal costing profit because you have a full cost of production here. OAR is there. Here you don't have OAR. You all learn when you are valuing the closing inventory or over production, if you have a highest closing stocks in units, if you follow the basis called the under absorption costing method, you have a highest closing inventory value because of the full cost of production. When you are removing the closing inventory value from the particular cost of sales, you have to deduct no? Under cost of sales, opening inventory plus production minus closing inventory. If you have a highest closing inventory value, this will lead the lowest cost of sales. Revenue is higher than the cost of sales. Definitely under absorption method, you have a highest profit. But margin, no, it's not like that. Why? You have only variable. Therefore, there is a low chance of valuing highest inventory units, but in the low value because not having the OAR. Because of that, you have a higher absorption profit. You have a lower absorption marginal cost. Understood? After, assume something like this. The connect corner of the board I can't see. Yeah. Sorry, I will show. Here, Nazca, I did some, not the amounts, some of the crosses I put. This part, don't worry. So it's okay. I will do that like that going forward because. Thank you, Nazca. Right. Sometimes when you are coming to the profit absorption costing method, sometimes you have a lowest absorption costing. Lowest absorption costing. Highest marginal costing profit. What is the reason behind that? Very good. Wow. Excellent. Highest opening inventory. Why? Your opening inventory you valued in here the full cost of production. Because of that, what happened? Cost of sales is increased. Also, under here you value the opening inventory the lowest value. That means there are not that much highest cost of sales compared to the AC absorption costing. Because of that, here highest profit, here lowest profit. At that kind of situation, lowest absorption profit and highest marginal profit, you have to add this to here to get this amount. If you have a highest profit here, lowest profit here, you may record to deduct from this amount to get this here. This is the one we done it at the classroom last week. We concluded like that all entire traditional costing method with the profit reconciliation and all. So that's why I want to do the small recap because since you also today join and all, for you to get the advantage of having revised. And Nazca, you too. Right. So today we are going to start the new session, new area. Can I have a pen? You hope you mark the first chapter we completed, no? And you also have a put a tick the rage page, content page, chapter 1 we done. You can listen to the recording for you to the class clarify the issues. If you have any doubts, you can come and talk to me. I will help you. Right. So now let's start with the. Now I'm not going to touch with the modern cost accounting pages, which is page number 14. Okay, let's do like that. Shall we finish the chapter 2 as well? Then after that, we can start with the new area. No problem. Can you turn the page number 14, part 1, page number 14, part 1 called modern cost accounting pages. Shall we do that now? And after that, we can cover the standard question later because then we can do like that. So chapter 2, part 1, page number 14. My online NASCA page number, chapter number 2, page number 14, modern cost accounting part 1. Right. Very small page. We can finish this as soon. Right. Let me explain about this chapter 2 now. Right. Now we are going to start with the modern cost accounting method. Now previously we learned the traditional cost accounting. Actually, why do you want the modern? Why do you want the modern cost accounting? Modern cost accounting method. Modern cost accounting method. What is the main reason behind that? Why do you want modern cost accounting method? Modern cost accounting method. Why is that? What is the main reason of having the modern costing? We followed the traditional. Why can't we use the same traditional costing method for this? Why can't we use? Actually, Kaplan and Cooper. This is the two researchers. They did a research. They found when you are working with the traditional cost accounting method, we call the traditional base under absorption method, under marginal method, that will give the incorrect valuations or incorrect detail for their decision making. They found that. Then finally, Kaplan and Kober, these two researchers said, right, we have to evolve absorption costing method to ABC method. We call activity based costing method. And they said the marginal costing method, that traditional method, should be evolved to throughput accounting method. Throughput accounting. We call throughput accounting. This is we call activity based costing. Activity based costing method. You remember when you are working with the absorption method, we calculated the one rate called overhead absorption rate. This OR we apply to the all particular activities. We didn't do this is based on the different activity. No, this is we applied the general for every activity because of the traditional context, historical convention, and marginal same thing we did. But I will touch this MC evolve to the throughput accounting later because our chapter is discussing about ABC method now. Chapter number 2. Here, Kaplan and Cooper, they did the research. So based on research, they saw OAR is giving the incorrect valuations, which is not matched for the modern context. What is the modern? Is the current situation. Because you all know, when you are running a business organization, you can't expect the one or two kind of activity. No, there are multiple activities. No, so that multiple activities you should have a different kind of rates for that activity. You can't expect the same rate for same all these activities. This is wrong. That's why they said this is wrong. Not fit to the modern context. Should be evolved. Should be expanded. Should be modernized. Then they did a nice kind of the question analysis for that. I think the same thing is in there, the book. They took the example called ballpoint pen manufacturer, like Atlas. Here they had a type of product. And the volume and the overheads and the actual cost per unit. So like that, they analyze this ballpoint manufacturer called Atlas or something like that. So like this for them to you to get the confirmation of why this is wrong. OAR is wrong. Why ABC is more suitable for the modern. The type of product they took: red color pen, blue color pen, and the black color pen. Hey, the amount called in front of the red color, there are 1,000 kind of red pens produced. There are 700 kind of pens they have produced from the blue color. So the black color, they produce 500 pens. Relevant to each volume, they have a common overhead. Red color, 1,000 overheads. Blue, 1,000 overheads. Black, 1,000 overheads. It's like that. Now, how much the overheads total is 3,000. What about the total volume? 1,000. So here, wait. This should be 500. This should be 700. 200. Now how much? 1,700 total volume. Now tell me, according to the overhead absorption rate, what is my OAR for this? You are taking the OAR calculation. How to calculate OAR equal to budgeted production overheads divided by total budgeted volume. Then now overhead absorption rate. How about that? What is my total budgeted production overheads here? 3,000. That's the total. If the company is following the traditional method, they might follow this OAR method by taking like this. So then here 3,000. And after that, what about the total budgeted volume? 1,700. So what is my answer? It should be $1.76, 1.7 units. Because per unit, no. So then Kaplan and Cooper, they did the research. After this actual cost per unit, they add another column called OAR per unit column. Right. For the red color, blue color, black color, for all the colors, you have a one common OAR. Under traditional, they didn't do it separate. They took the full total and they calculate the one particular general OAR. No? So for the red color, you have a 1.76 color OAR. For the blue color, you have a 1.76. Black color, yes, we have a 1.76. Like that, you have OAR like this. Got it? Then after, actual cost per unit calculation is the modern context. This is the actual scenario. This is a real one. How to calculate? 1000 divided by 1000, which is 1. 1000 divided by 500, which is 2. 1000 divided by 500 kid? 1000, because you to get the actual cost per unit. 1000 should be divided by 500. 0 to 0, it should be 2. 2. And this 1000 divided by 200, it should be 5. These are the actual cost per unit. Now see, did you learn? I hope you remember. When you learn in the economics and all, we learn if you are producing the highest volume, my actual cost per unit should be very low. If you are producing the low volume, my actual cost per unit should be high. Under economies of scale, this economies of scale, we learn that. If you are producing the high volume, mean there are high chance of having the wastage because we are consuming all lot. When you are producing a low volume, mean there are high chance of having the wastage as well. So then actual cost per unit is very high. That is understood. Understood. When you are following, when you are applying the OAR under traditional method for this, when you are producing higher volume, you have a highest OAR. When you are producing the lower volume, you have a lowest OAR compared to the actual cost. Higher volume, highest OAR compared to this. Lowest volume, lowest OAR compared to this. Can you consider, can you confirm this method, traditional method, as a accurate method for a decision making? No. That's why Kaplan and Cooper, they did the nice research for this to confirm with all the people, all the management accountants, right? This is the reality. This is the truth. Why we decided to do this kind of analysis and why that's why we recommended absorption method should be evolved to the ABC under modern context. Marginal costing should be evolved to the throughput accounting under modern context because of this reason. In near real situation, if you are producing the highest volume, actual cost per unit should be very low, but this will give the highest one. Wrong. If you are producing the low volume, my actual cost per unit should be very high, but they are giving the very low volume, low value. Very wrong. Can't make the decision based on the OAR. Why? Each of the activities we have to have different rates. But the is saying each activity common rate. Why? They are taking the total and they are multiplying, dividing. But here we are having the for each activity we had a one particular rate. That's why the difference under ABC and the absorption. Under ABC, you are going to learn in this level, this lesson. If you have more level of activity, how should I explain the cost pool? We call the cost amount. And what about the cost driver? We call the real basis. And what about the cost per driver? We call the rate per the cost or whatever the per hour or particular activity. So like that, you are going to do each of the calculation, each of the rate per particular activity based on the number of activities are given. Based on that, you are going to introduce new activity as well. So like that, you are going to do. Understood that? If you want, you can make this note in your notebook. But anyways, I have given the nice note, same note in the page number 18 as well, 16. So absorption costing equal to the ABC method. So here you can see Nuska also, you can turn the page number 16. Theory, whatever explained I here, already given. Absorption costing evolved to ABC. On scrutinizing absorption costing from a modern context, we can recognize two main problems. One we call modern operating environment is very different to traditional operating environment. Traditional environment and modern environments are there. In the traditional environment, you have a modern, sorry, we call the more direct cost. Under traditional base, you have a more direct cost rather than the overheads. But when you are focusing on the modern context, yes, we have a more overheads rather than having direct cost. Why more overheads mean indirect cost? Our task is to allocate the indirect cost. No, that is why we want to follow according to the modern context. Traditional approach, you have a volume base, like a units produced, machine hours, labor hours, that's it. When it comes to operating environment, you have a multiple reasons based cost. For example, activity like machine activity. You have to have a reason for base for the machine hours. Some activity we can say number of setups done. So, or say we can say handling of the orders. Sometimes we can say, for example, here we have some question. We can say relating to the production run setups, handling of order, handling of the customer complaints. So like that, there are different level of activity. In that kind of a situation, if you have a different activity, you have to recognize the relevant rate per relevant activity. You can't use the common rate for that. If you are going to use like that, it's wrong. Can't make the accurate decisions. This is why Kaplan and Cooper said very clearly, we have to focus on the modern context under ABC. And then the traditional approach, we have one product only, but we can't expect the one product in the real situation. We have a different kind of multiple products. Like Atlas, they have this kind of. Further, they have a pink color pen, green color pen, like that. We can't expect only one product. So they have a different product categories as well. Eraser, rulers, books, and all. We can't expect like one product from one company. Can't. But modern context need detail, sorry, multiple products, and also traditional context you have a one rate, lack of detail, like that. Only one rate. But modern context we have a multiple rates. When it comes to operating environment, more manufacturing oriented. Why the manufacturing oriented? Fully you are focusing on the manufacturing. We can't say only the manufacturing. No. We have to focus the sales service sector as well. This is the service. Finance institute, they are providing the service. Some of the consultancy service, they are providing the service. So this is the service sector. The service sector, we call under modern, more service oriented. Traditional, we have OER mostly on labor hours. OER on labor hours. Traditional, like fully on labor hours. Modern, you can't use like that. All other computer control. So like that, we have a small theory explanation and also balance part. I already explained in this example. So you have the same things, whatever I explained here. So I'm not going to repeat that same thing again and again because it will feel very boring. So whatever I discuss here is there. For your knowledge, you can copy this down somewhere and you can make your own notes. I can give a few time for you to prepare with that. Nuska, if you have any questions, you can ask. And my physical partner, any questions you can ask. Yes, very advanced. But don't worry, very easy to manage. But actually, BA two, ne? There are more details beyond that BA2. Also, when it comes to the standard question after that, I'm going to start with the standard question as well today, but it will take the long time because I think we need the June batch also. Few classes for that because the standard question we have a basic formula. So you done the basic fundamentals, but again the CIMA P1 they are going to test the same thing. So I decided by using the one of the simple area one by one I'm going to train you how to develop the basic standard question and variances. And after that, I'm coming to CIMA, real CIMA, P1 advanced variances. There is a mixed variance, yield variance, sales mixed variance, sales yield variance, operating variances, planning variances, like that. And operating statements, I think you learn in the foundation level, but here also they have a operating statement similar to that one. But in it, few of the areas are came from the, I mean, those few areas are beyond the BA2 and the budgeting, flexible budgeting, functional budgets, risk and uncertainty, which is you didn't learn in that time series and regression, but you did in the statistic area, but there are something similar to that. And the break-even points are there. So multi-product break-even, linear programs, those things are there. They have a bit new additions, but the balance you have a basic thing. But I think you completed the BA2, no? You completed. How much you got? Wow, I think you are in the top score. But what's your name? Your name went in the top score. Ah, right. 5 years ago. Oh, right. 5 years ago. Oh my God, right. Okay. Ah, right. Okay. So that's good mark. 130 means out of 150. Excellent. So that means P1 also can manage. Don't worry. You're from what? Which university? Yeah, university. Wow, excellent. Now you done with the degree? No, it's still you are. Uh, second year. This is second year, no? Ah, right. What is the degree? Accounting? Commerce, no? Wow. I think who are the lecturers? Did you learn under Professor Kennedy D. Gunawardana? Huh? Professor Kennedy is one of he's one of my lecturer, Professor Kennedy. So Professor Kennedy, right. So okay, there are so few lecturers are there because I also studied with them, and then few lecturers also there in there. Still, Professor Kennedy is doing his sessions. Sometimes he's not in the Sri Lanka now. He's in the overseas as well. Because her daughter is one of my friends, Satya Gunawardhan. She also now a lawyer. She's now in the Washington. Yeah, that's the professor's blood and all. No, they are also growing like that. So, right. Let's start with the calculation. Because I thought to do the calculation first because reading the theory, it is very difficult to survive with them. It's very boring. With the question, we can learn the theory. Turn to page number 19. Possible OTQ line number 1. Nuska, our department. Nuska also there. Hello, Nuska, you are from the Japur. You know Nuska? Ah, yes. What is your name? Sarah. Sarah is here, physical in the physical lecture. May Nuska, what is the department, Nuska? Accountancy. You are commerce, no? But the accounting, that means BSc, you are also having the BSc, ne? Bachelor of Science, no? BSc, no? BSc accounting, yeah, accounting special. You are BSc commerce, like that, special. Oh my God, Nuska. He's the head of your department. He's one of my lecturer, Professor Kennedy D. Gunawardana. Okay, Nuska, that means this CIMA P1 is nothing for you. I think, Nuska, you also new joiner, no? For the P1? Yes. Welcome. Very good, huh? Nuska, if you have any possibility to join with the physical lectures, come for the lectures because we can share the thoughts and all. Because she also in the University Jawadanapura. So you also from the Japura. That's good. If possible, if not, no problem. Because, yes, can. Okay, very good. Come, Nuska. Sarah is there. You can have a nice chat and we can do the nice session because rather than online, we physical lectures are very interactive. That's why you selected us. And you too. Right. Now let's start with a question from the possible OTQ line number 1, which is called the page number 19. Let's read the question. I will train you step by step how to do this. A company manufactures two products, L and M, using the same equipment and similar processes. An extract of the production data for these products in one period is shown below. There are two products called L and M. Each product L and M they displayed in below. Quantity produced in units, we have 5,000 under L, 7,000 under M. Direct labor hours per unit are given 1 hour per unit under L and the 2 hour per unit under M. Machine hours per unit are given 3 hours per unit under L, 1 hour per unit under M. Setups in the period 10 under L, 40 under M. Setups in the period mean no per unit. Full setup has given for the product L and product M. Not the per unit, all are the full setup. Because they had to set up the machine to get the particular product. No? So based on that, they had to set up in the entire period, not for the product base. Entire period they set up the full. The same as it is orders handling in the period also they are. Under L product 15 and the M product it is 60. Overhead cost. Overheads cost. Relating to machine activity, relating to production run setups, relating to handling of orders, and total amount is there 285,000. So now tell me how many activities are there under this business manufacturer? How many activities are there? 3 activities. These are the 3: machine and production run setups and the handling of order. So this is the modern context. Sometimes in the real practical scenario, you have more than these kind of 3 activities as well. When you are working under OR method or traditional method, you can't make the accurate decisions. That's why we want to work with the ABC under activity-based costing. So let's do the one by one, the steps and all calculations relevant to this. First of all, right. So here, the requirement, they want the first requirement you to calculate the OAR if direct labor hour base rate is used. That means you want to calculate the overhead absorption rate. It is common for the everything, no? Common number 1, calculation of overhead absorption rate. First formula is total budgeted, fixed production overheads, total budgeted, fixed production overheads, divide by total budgeted, total budgeted. What is the volume? Not the units, not the machine hour, which should be direct labor hours. Total budgeted direct labor hours. Now, how much my total budgeted fixed production overheads here? 285,000. So 285,000. Divided by how about my direct labor hours. Here, we want to get the total direct labor hours because we have a two products, no? So here, direct labor hours per unit is there for the product L, which is 1. 1 is the per hour for product L. We have to multiply with the 1 hour per unit with the product L, number of production volume called 5,000 units. And then plus, again, under product M, you have a 2 hours per unit and you are producing the 7,000 units under product M. So 2 into 7,000 units. So then now you have the total direct labor hours because this is a total one. So what is my total direct labor hours? 5,000 and 14,000 plus 5,000. 14 plus 5,000, 19,000. 19,000. So then 19,000 is my total direct labor hours. In overhead absorption rate equal 285,000 divided by 19,000. How much? 50. $15. $15, which is we call 15 per direct labor hour. $15 per direct labor hour. The first requirement. It's a traditional method. Exactly. The second one they want you to calculate. Calculate the production overhead cost per unit of the L under traditional. Third one they want you to calculate calculation of production overhead cost per unit for the product M. So I'm going to do the 2 and 3 together now. So first I'm going to do, I have a two products called product L and product M. They want me to calculate the production overheads cost per unit. Production overhead cost per unit. $15 is general for the product L and the $15 is general or common for the product M as well. This is the one. So now the problem is they want you to calculate the per unit. No. $15 is the direct labor rate per hour. So now you to get the overhead cost per unit, direct labor rate per hour need to be multiplied with hours per unit. Direct labor rate per hour need to be multiplied with hours per unit to get the production overheads cost per unit here. Under product L, how much is your direct labor hours per unit, which should be 1. Yes or no? Right. How about here? 2. So for your knowledge, I will write here. You to get the production overhead cost per unit, you may require to do AR hour per direct labor hour multiplied with direct labor hours per unit. Here, OAR per unit need to be multiplied with OAR per not unit per direct labor hour. OAR per direct labor hour need to be multiplied with direct labor hours per unit. This is the method. Understood? Now my answer is $15 per unit, $30 per unit. The answer. So we calculated the both second and third requirement. It's also under absorption costing, traditional costing method. Done. Not our scope now. We want the ABC. They want us to show the difference at the end of this question. That's why. Now we are coming to the small MCQ, the true and false kind of the question. Provide the true and false. Here one part is not clear. Can you please turn the page number 20, Nuska and all. Machine, if possible, can you write it again because it's not visible properly. Machine hours is the best driver for machining activity. Machine hours is the best driver for machining activity. Here we have a true and false. Actually, answer is true because machine hours is the best driver for the machining activity. Answer also true. And then you have another one called machine hours is the best driver for production run setup activity. Wrong. We can't use like that. For the machine production run setup, we had a run setup for the period. This is false. Wrong. The third one, handling of orders depends on number of setups. Handling of orders depends on number of setups. That's also correct or wrong? Because number of setups wrong. Handling of orders, we had to use the number of orders handled, not the setups. This is false. So now we are coming to the calculation of the cost per driver. Now this is the ABC. So this we have a steps to follow. Shall we start from the beginning one by one? There are main two steps. I will show you. Then we can cover the theories as well. Right. Let's do this now. Nuska, hope you okay with this. Now we are going to do the ABC step number one. Huh? So here they ask the different questions, but I'm going to do the general calculation, and based on that, I'm going to provide the answers for that. Okay. Thank you, Nuska, for the feedback. Response, right. When you're working with the ABC method under modern cost accounting methodology or the method, ABC method, we have a step number one. We call the step number one. Step one. Step one. First, we have to identify activities. And then we have to identify relevant to each activity. What are the cost pool? The cost amount. Therefore, we call cost pool. Then once you're done with the cost pool activity identifications and the cost pool or the cost amount, and then you have to have a cost driver. We call the cost driver. Cost driver. After the cost driver, you have to have the one particular one called cost driver. Actually, in other words, activities called different activity. Cost pool means the overhead cost. Cost driver means the relevant base, the volume base, value base, machine hours, labor hours, like that. We have a different activities under that. Therefore, we call under here cost driver. Cost per driver means this cost amount need to be divided by the each relevant cost driver. Then you will get the rate per driver. This we call the cost per driver. So now let's do the one by one this computation. Here, how many activities we have? 3. The one activity under activity number 1 we call machine activity. Machine activity. Machine activity. Then we have another driver cost activity call production run setups. Production run setups. Production run setups. The third one we have, the third activity we call handling of orders. Handling of orders. Handling of orders. So like that we have the activity called machine activity, production run setups, and the handling of orders. Then relevant to each activity, machine activity, what is my relevant cost pool? How much? 200 20,000, which is my overhead. We call 220,000, right? Relevant to production run setups, what is my cost pool or the overheads, which is called 20,000. Relevant to handling of orders, what is my cost pool or overheads, which is called $45,000. Right. Done. Now we done with the two activity part under step number 1. Done. So now you may require to identify each cost driver which is relevant to the each activity prior to you calculate the cost per driver rates. So here we have the steps called under cost driver in front of the machine activity. We have a cost driver. We can introduce the relevant cost driver relevant to machine activity, which we call the total number of machine hours. This is my one of the base. The reason, the driver. Total number of machine hours. We can write like that. My cost driver for machine activity. Total number of machine hours. Machine hours. Actually, this one is not provided for us. We have to think based on the practice. But they have given the numbers. Now we should suit, we should match the relevant driver to the relevant activity. This is the way we have to do. And we have to follow. So now tell me, under this also, when you are working with the total number of machine hours, here we are going to use the total machine hours relevant to the product L and the product M. So here, machine hours per unit for the L. We are producing the 5,000 units. Then we want to get the total machine hours for the L as well. And plus, we want to get the total machine hours for the M as well. So here we should do 3 into 5,000 plus machine hours per unit is 1. 1 into 7,000. So my answer is 15,000 plus 7,000. How much? 22,000. So 22,000 is the my volume of this. Total number of machine hours is 22,000 hours. That's my relevant driver for the machine activity. Understood? Clear? Every question from the CIMA P1 relevant to this, first do like that kind of diagram, very easy to calculate. If they ask any questions from whatever the way, you can answer that from the calculation. Let's introduce the next cost driver for activity called production run setup. What is the relevant driver? So according to the question, we can see there are setups in the period. So we can say total setups in the period. 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 Here we don't want to multiply it with the 5,000. Here we don't want to multiply it with the 7,000. Why? We have set up the production setups according to all setups for the production volumes. Therefore, straight away we can use the 10 plus 40, which is we call 50. This is the total setups for the period. Total setups for the period. Then finally, we have a handling of orders. Handling of orders. Handling of orders, we have a total, what's the driver? We have a nice one called handling in the period. We can say total orders handle in the period. Total orders handle in the period. Total orders handle in the period. This is the one. Here, that also no need to calculate, already given in that. So 15 plus 60, which is we call 75 total orders handled in the period. So now we done with all the driver identification which is relevant to each cost activity. Now we are going to calculate cost per driver for this computation. Here cost per driver can be calculated cost pool divided by the cost driver. So you have a cost per driver which is 220, cost pool 220,000 divided by 22,000, which is we call cost per driver. My cost driver, then you can calculate the cost per driver from here. So here, I think 110 something. Normal 10, no? 10, $10. This is we call $10 per machine hour. $10 per machine hour. $10 per machine hour. Right. So then now here we can calculate cost driver for production setups. Here we have a overhead cost pool is 20,000 divided by total setups in the period is which is 50. So 20,000 divided by the 50, how much? 410. 400. $400. We can say $400 setups. Setups done. Next one, you have a overhead full cost pool 45,000 here and divide by the orders handled in the period which is the driver, cost driver, we call 75. How much? 600. Yes. $600 orders handled for orders handled. So this is we call activity based costing, the first identification of each activity related driver rates. Now this is not in. Still we had to do the second step. Why? They want us to calculate the overhead cost per unit of L, M and all. So now we almost be done with the fifth and sixth and seven. So can you please come to the page number 20? Let's put the numbers here. Calculate cost per driver for machine activity 10 per hour. Calculate question number 6. Calculate the cost per driver for production setups. 400 per setups. 8 one. Calculate the production. Sorry, 7 one. Calculate the cost per driver for handling of orders. 600 per orders handled. We done with the 6 7 and 6 7 5 6 7 done. Now 8 and 9 is saying about you to calculate the again overhead cost per unit for the L and the M. What we did for the AR. So now let me do this in a separate, as a separate step. Step number 2. Shall I clean the whiteboard? Yes. Nuska, shall I clean the whiteboard? Hope you, yes. Okay, Nuska. So you can follow the same structure for this because going forward in the middle of the class session, I'm going to give the full pack of question tute, which is already done for the previous exams and all. Based on that, we prepared the similar kind of pages booklet. It is hard copy. During the session, we are going to do that as well. Here we have some practice questions. Going forward, that after you receive the middle of this session, that the question book, we are going to practice that as well by using this knowledge. Still, we have to cover the chapters with the practice questions, right? Okay, so these all the questions whatever I'm explaining and taking as example, all are the examination paper given questions from the early CIMA P1 paper base, and some of the computation we have made according to the P1 examination computer based system. So therefore, this book plus my mock exam one here and another mock paper two at the end of this session, and with the question book, practice these three and go for the exam. You 100% sure about the more than 115 marks out of 150. The pass is sure. I want you to get the more than 115 out of 150. That's the target. Now pass rate is 100. 100. Did you notice that CIMA web page also, I mean, the computer-based system has changed now. I'm not system. The CIMA accounting has changed. Yeah, platform changed. So that's a problem because I'm also still struggling to. Did you found that how? Did you find that how is you can go to the exams you have already completed? How can you? Can you show me you from you? Oh my God, you don't remember? Then now we have to put the email address and the password, no? Yeah, not the account number. Yeah, your own email address and the password. It's like that. So how can you? Ah, that's why I also didn't log into my account long time now because that's why I one day I saw that because we had to put the email and the password. That's it. Because no need to have this our contact ID, CIMA contact ID. Very different now. AICP and CIMA. Right. Step number 2. Okay. Step number 2 is saying, right, you to calculate the production overhead cost per unit L and the M. Here, again, we have a three activities, which is we call machine activity. Machine activity. Here we have a production run setup. Production run setup activity. Here we have a orders handled, orders handle, or handling of orders kind of activity. So machine activity, we received the one particular rate per machine hour, which is $10. 10 is common and general for the product L and the M as well. Under traditional method, same like that. But the thing is, this is the machine hour. No, you want to calculate the production overhead cost per unit under machine activity. So machine hours per unit is given for the product L. How much? Machine hours per unit, how much under product L? Which is 3. 10 into 3. $30 per unit. Here, it is 1 hour per unit. This is we call $10 per hour per unit. $10 per unit. $10 per unit. Understood? Same as it is under production run setups, we have a product L, the rate called 400 per setups in the period. So 400 is general for the L, 400 is general for the M. Now the problem is you have this 400 for the setups in the period, per period. This is the rate per period. So now they don't want you to calculate what? A unit. No? What to do? You first need to calculate the total setups in the period which is already given in the product L. And now what to do? 5,000 is there. You want to get the per unit, no? 400 into that 10 total setups. Per total setups is there. But we want the setups per unit, no? Divide by the 5,000. Again, 400 is for the product L. This 400 means per set, dollar 400 per setup. You will get the total setups now. 200 rate into the 10, no? Now this total setup is there, but we don't want the total overhead. We want the per unit. Divide by the number of production volume called product L, 5,000 units. Then call that cost per unit. From here, 400 into 40 divide by 7,000. Done. So like that we can do. What is the answer for this? 8. 8. Normal 8 should be minus point decimal number. 4,000. 0.8. Yes, 0. Yes. $0.8. $0.8 per unit. Right. What about here? 2.28. Yes. $2.28 per unit. Right. Now the next one, orders handled in same way. You received the $600 here, 600 here, no? The 600 into the particular order handled in the period, which is we call $15. Sorry, not dollar, 15. Divide by 5,000 once again per unit you want. 600 into 60 divide by 7,000. Now tell me what is the rate per unit. $1.8 $1.8 per unit. 5.14 dollar 5.14 per unit. Right. So now we're done with this. Now they want you to calculate the not the this way like this. They want you to calculate the total production overhead cost per unit of product L, total overhead production cost per unit for product M. So now we have to do like this. Take the total overhead. We call total production overheads cost per unit equal 30 plus 0.8 plus 1.8. How much? 32.6 dollar 32.6 per unit. Here 10 plus 2.28 plus 5.14. 18.242 dollar 18.42 per unit, dollar 14.2 per unit. So this is the cost per unit. Same one. Did you receive same answer? Yeah, you do and tell. Then after that we can do the one. Then after that chapter 2 also completed. I'm going to finish the syllabus as well as soon, and also after that, I'm doing the revision session until the final the day because I want to do the more question based 60 questions. I'm going to do continuously as a practice, so, along with the question book and my another practice. Done. Yeah. Correct, no? Right. Okay. So then now the requirement question page number 20. We provided the 8 answer is this one. For the 9 answer is this one. Again, you have another one called the 9th one. Sorry, 10th one. State whether following statements are true or false. Absorption costing understates product L cost compared to ABC. ABC correctly cost product M compared to traditional costing. So මෙහෙම තිබ්බම we are confusing no. We can do one thing like this. You whatever I did in earlier analysis, we can do something similar to this. Let's say product type, L and M. And then we can say number of volume produced. L 5000 volume, M 7000 volume. Under ABC, we have a cost per unit. For the L, 32.6. Here, $18.42. Under OAR, we calculated, I guess, $15 here and $30, if I'm not mistaken. OAR के product L cost per unit එකයි 30. $30. So if you have some questions like that, after you done with the computation, this is the questions. මේවා තමයි MCQs එන්නේ. This kind of the way. First one they are asking absorption costing understates product L cost compared to ABC. Absorption is the OR one. Understate the product L compared to ABC. Actually, when you are producing the low volume, OR is very low, but ABC give the highest one. Actually, this should be happen. This is wrong. That they say absorption cost in understate the product L compared to the ABC. True, no? This is true. Answer is true. Answer is true. And then you have a ABC correctly cost product M compared to traditional costing. Anything, no need to worry about that. It's true. Actually, ABC giving the highest accurate one. Why? The product M also you have a highest volume. Highest volume, we had to have a lowest cost per unit, but OAR is giving highest one. This is wrong. That's why Cooper and Kaplan said we want to evolve to new one called ABC. So with that, we're done with the chapter number 2, the part 1. Chapter 2, part 1 completed. Chapter 1, part 2 completed. So, so now other costing techniques are there. Under that, we have to do the throughput accounting and all. So, other costing techniques, page number 21. Right. So after the break, I'm going to start the other costing techniques as well. I'm going to finish that also. Under other costing, page number 21, can you please turn the 21? Nuska, please mark the chapter 2 completed. And page number 21, we have other costing. Here we have accounting for byproducts, accounting for joint products and all. This joint product costing I'm going to do with the one of the area called chapter number 20. We have a linear programming related. With that I'm going to do. Therefore, this area I'm not going to cover here because it's small questions here. We available. We have a small questions, but I'm going to start with the other costing. Marginal costing evolved to the throughput accounting. So this is like that. So after the break, I'm going to do that. So now time is 3:30. We are going to start around 4 p.m. So sharp 4 p.m. we are going to start the discuss about that with the chapter number 3. Right. Welcome back, Nuska. Hope you can hear me. Hello, Nuska. Hope you can hear me. Hope you. Yes. Good. Perfect. So let's start with the session, chapter number 3, other costing techniques. Chapter number 3, other costing techniques. Page number 21. Page number 21. As I explained, joint cost and all, I'm going to do with the separate chapters there. For that, I'm going to not attach with that. So page number 24, Nuska, turn the page number 24. I'm going to start from that. The joint cost and product and all these things I'm going to do with the. There's a separate lesson called the linear program. With that, we have put the explanation on that. So I'm going to continue with this, right? Okay. So now we learn under traditional costing method evolved to ABC. Now we are going to learn with the marginal costing evolved to the throughput accounting. So this is the now new thing, but it's also very easy to calculate and do all these computation. Here you have learned the throughput related something in the CIMA foundation level, which is we call the contribution per limiting factor. Remember, yes, contribution per limiting factor, which is similar to that, but here under throughput accounting, you are not going to consider all the variable cost. You are only considering about the, which is we call direct material cost. That's it. So the direct material cost uh, in throughput accounting, they said direct material cost are the cost. This is the accurate variable cost. They said direct labor, variable production overhead, fixed production overhead. All these things are the conversion cost. They said under throughput accounting, we have to focus about only the direct material as a variable cost. But contribution per limiting factor or the contribution we learn, sales minus all variable cost. When it comes to throughput accounting, they said only the true, they call the word called the true. The true variable cost is direct material, direct labor, variable production overhead, fixed production overhead. All these things are conversion cost. In other words, factory related cost to prepare or manufacture this kind of the product or unit. Those conversion costs are relevant for that, but we can't say a variable cost. They call no, therefore we want to convert that particular true variable called direct material into the product. For that conversion, we want to use this thing, direct labor, variable overhead, fixed overhead. Therefore, they say split direct material from that and direct labor, variable overhead, fixed overheads are the conversion level cost. We call the factory level cost. That is the difference. That's why they wanted to do the under marginal cost into throughput accounting, that split among them. So here we are going to learn that. Page number 24, you can see the what I explained here. The maximized contribution is the marginal costing main objective. When it comes to throughput accounting, maximizing the throughput is their objective. You can see under marginal costing, when you are calculating the contribution, you use sales minus variable cost, direct material, direct labor, variable overhead. When it comes to throughput accounting, as I explained, only the true variable cost is direct material. Here they gave the reasons and all. Calculating contribution of each product, contribution per unit, selling price per unit minus direct material cost per unit, direct labor cost per unit, direct expense per unit, variable production overhead cost per unit, which is they call this is under contribution. And when it comes to throughput accounting, they assume that only real variable cost, highlight the only real variable cost is the one that change with the units being produced, which is direct material. That's why they call like that. Only the real variable cost, which is going to be changed with the based on the number of units you produced. And they said, although direct labor and variable overheads were traditionally considered as variable cost. Can you highlight that also? Direct labor and direct expenses and variable overheads were traditionally considered as variable cost. Comma, it is now argued that workers are hardly paid on unit terms and are mostly fixed salary earners. You all know people are working as a fixed salary earner and are mostly fixed salary earners, and even some of the utility bills like electricity bill, water bill, or telephone bill, you can say fixed and then variable, semi-variable. Like that, the most are semi-variable. So it is argued that direct labor and variable overheads are not real variable cost. Underline, direct labor and variable overheads are not real variable cost and are considered as fixed or conversion cost. Again, highlight fixed or conversion cost. Hence, it is not going to be influenced for the decision making under throughput accounting. This is the entire statement we took from one of the OTQ questions. One of our students done with this area, they received some questions from that. Based on the communication we had with them, we developed the theory point for that. Very important theory. You might get some few theory questions along with the calculations that area. Make sure to start study and remember this theory part. The real variable cost under throughput is direct material. Direct labor variable overhead are the fixed or conversion cost, because this is not the real variable cost under throughput account. When it comes to marginal costing, this all the arguments and assumptions are we can ignore. We can say all the other variable costs. That's a split. So when it comes to throughput, you can calculate the throughput we have a formula called selling price minus variable cost. Here, only real variable cost is direct material cost. This is the formula for throughput. So here you can see they given in the bold color. After that, they gave the throughput per bottleneck time period. What is bottleneck time period? This bottleneck time period, what does this mean? Bottleneck. Bottleneck time. We can call this bottleneck time period in another name called limiting factor. Limiting factor. Another name is there constraints. Constraints. So these three words are similar words for the limiting factor, bottleneck, constraints. That means, in other words, which is a scarcity of resources, we cannot allocate all the resources available to each production. In organization, when they are producing with the particular products, they are going to first look at what are the most profitable item, what are the highest maximized contribution given item. In this case, what are the maximum throughput given item? Based on that, they are ranking and they are allocating the resources. Why? We have a limited resources. Here, bottleneck means when you look at the water bottle like this, the bottleneck which is very constrained. You can't put this out fast and all. So you have to take some time to do. That is the limiting that factor. So that's why we call the bottleneck. when we are doing with the throughput accounting calculation, we are using the term called bottleneck period. We are not going to use the limiting factor or constraints. When it comes to the contribution, yes, we are going to use the limiting factor, but similar name. But bottleneck periods are straight away linked with the throughput. Limiting factors are straight away linked with the contribution. But anyways, totally limited resources. Understood? So then now, when it comes to the formula called throughput, throughput, throughput per bottleneck time period. Throughput per bottleneck time period. You can calculate by using the formula called throughput divided by throughput throughput we call selling price minus direct material. Throughput divided by bottleneck resources. Here we have a total time on bottleneck resources. We can say bottleneck resources. Bottleneck resources. Actually, what are the bottleneck resources? Here you can have a something called machine hours, labor hours. Those kind of the resources can be there. Some hours we call machine hours like that. So these are my bottleneck resources. So we in this question in this area, we are going to work with the calculation of throughput per bottleneck period. And then after we are going to learn the throughput accounting ratio. And then we are learning conversion cost for the bottleneck time period. And then we are ranking some of the organization, they are not going to provide one bottleneck resources. In practically, we don't have one bottleneck resources. We have a multiple bottleneck resources. In that kind of the situation, we have to calculate the exact actual bottleneck resources. For example, let's say you have a cutting machine, finishing machine, and like that assemble. Like that, there are 2-3 different departments. So each 3 different departments, each 3 resource levels are there. But here, one department, one resources are when you're talking about when you are focusing about one of the resource from the finishing department, finishing machine or whatever, or cutting machine, finishing machine, assembling machine, like that. We have a 3 different machines. We can't expect the maximum output from then each one of the machine. You have a different 3 products, product A, B, Z. You can't expect the same maximum production, maximum products from these one of these machine. Definitely there is a resource we call the bottleneck. This kind of the situation, if you have a questions with this like that, you know this formula, you knew that formula, you learned that, but you don't know how to calculate because you have a different bottlenecks. In that kind of the situation, we may require to calculate first the exact one particular bottleneck, either finishing machines or either cutting machine or this we call assemble one. For that, we have a different 2 methods of calculating bottlenecks. Bottlenecks resources identification we can divide into 2. One called resource utilization rate. Resource utilization rate method. The second method we call maximum. Oh, Nuska can't see this. Sorry. If you have a more than one bottleneck, we have a 2 methods to identify bottlenecks, bottleneck resources. 2 methods are there. One we call resource utilization rate and maximum production, maximum production volume. Maximum production volume. Under resource utilization rate, we have to focus on, there is a formula called total hours required. Nothing, you can say total resource required for the production need to be divided by total hours already available in the department or this company, or total hours or total resource required divided by total hours or total resource available need to be multiplied with 100. This is the resource utilization rate. We call RUR rate. This is the one of the method to identify the bottleneck. For example, let's say total hours required is 500 hours. Let's assume 500 hours. Total hours available, which is, let's say, 400 hours into 100. Actually, can you do this production process? No. This is your limited amount. But you want this much, but you have this much. Can you tell me the computation of how much? What about the RUR rate? Hmm? 125. 125%. Without multiplying 100, you have a 1.25. Right. Actually, in the resource utilization rate scenario, they said your RUR rate is more than 100 or more than 1. This is we call the bottleneck resource. It's like when you are working with the financial statements ratio and all, you have a current asset divided by current liability under the liquidity ratio called current ratio. Available current assets are not sufficient to cover the available current liability, then we call less than 1, no. Then 0 point something something, no. Similar to that, but bit different. Here, your numerator is the total hours required, total resource required, divided by the available resources or hours. Here, required this much, but available this much. Then you can see there is a limited, no. And then here you have a more than 100 or more than 1. Then definitely this is the resource utilization rate. This is based on that. This is bottleneck. If you have more than one kind of the product, that machine or whatever resources, you can calculate like that. Take the highest RUR given resource as a bottleneck. Then you can find, right? Finishing machine is a problem. Yes, this is the bottleneck. This is the one of the method called RUR. Understood? Exactly. If you have a multiple, yeah, actually, for example, let's say in this scenario, you have a two machine, finishing machine and the cutting machine. Here, resource utilization rate is 125%. Assume here you have a resource utilization rate is let's say something called 110%. What is the highest given one? This is the most important closest one. We are going to select this is at the entire bottleneck resource. Based on that, we are going to do all the computation, the throughput accounting. This is the another method. Nuska, hope you okay with this discussion. Then we will do the question, then you can further clarify. Understood? Clear? Yes. The next one, I'm going to erase this because we have a formula. But the next one, because we have at the end of, I guess, yes, we should not in here. It should be in the page number, maybe page number 29. You have a resource utilization rate, total resource required or hours required divided by total hours required or hours available or total resource available into 100 kilo daganna. Maximum production units is there, another one. Then now I be done with the discussion for resource utilization rate. No. Another method is there. If you are working with the next method called, this is done, maximum production units or maximum production volume. Here we have a formula, maximum production volume. Maximum production volume. How to calculate? Total hours or resource available. ඒ කියන්නේ දැනට තියෙනවා. අර කෙකලේ යටට දැම්මනේ available set එක. Here we are going to take it as a numerator. Total hours available need to be divided by hours per unit. Then you definitely know, once you divide by this, you definitely will get the number of production volume in units. Your answer is units. From that, you are going to do the lowest maximum production units given particular finishing machine or cutting machine or assemble machine or whatever the each three items given. From that, you are going to select what is the lowest maximum production units given one. From that, you are going to say the lowest given one is a bottleneck. These are the two methods. Bottleneck, identification of the if you have multiple bottleneck resources, these are the two methods to compute. So you can make some note. Yeah. Actually, yes. Yes, of course. Very good. Right. Yeah. Right. Now, we discuss entire explanation now. So I thought to do the question and then to confirm with the theories, because otherwise it's very boring without doing the question. So can you come to the page number 27? Page number 27 of your textbook. Possible OTQ lines number 1. So you might get the questions from that as well. Sometimes limiting factor calculation related. Throughput per limiting factor also you have to calculate is based on the examiner requirement, because they want to evaluate the past learning as well. Sometimes can be. So therefore, I took the one of the past paper kind of questions from that CIMA OTQ exam engine. We call the computer-based system. Possible OTQ line number 1. Let's read the question. A company produces 3 products, D, E, and F. The statement below shows the selling price and product cost per unit for each product based on traditional absorption costing system. That means traditional absorption costing system means definitely they are having the throughput, not the throughput, marginal base, we call the contribution per limiting factor. That traditional costing system, no, the absorption costing system, wait, they use like that. Yeah, can you please cut the absorption part? Keep only traditional costing system, because absorption is a different scenario. It's the overhead related to full cost of production. Cut the absorption part, only keep the traditional costing systems. That's the correct way. This is one of the printings. Product D, product E, and product F. Selling price per unit given. Variable cost per unit are given. Direct material cost per unit. Direct labor cost per unit. Variable overhead cost per unit. Fixed cost per unit given. Fixed overhead cost per unit. Under that you have a total production cost per unit. Profit per unit after removing all the cost per units from that amount, we can say profit per unit. Additional informations are there. Demand per period, number of units. We have a 3,000, 4,000, 5,000 for the each products. And the time in process A, which is given in the minutes, 20 minutes per unit of the product. And the product E, 25 minutes per unit of the product E, 15 minutes per unit of the product F. So the next page, if a traditional contribution approach is used, ranking of the products in order to priority for the profit maximizing product mix will be. That means they want you to calculate the contribution per limiting factor, and then after you have to do the ranking. Based on the ranking, highest profit given one, you have to select as one, and then best two, and the next three. What is the correct answer? We have to calculate like that. Let's do the first question. Let's do the first requirement, and Nuska. Right. So we call traditional approach, which is we call marginal costing. Traditional approach, marginal costing. We have a three products called product D, product E, and the product F. D, E, and F. So then selling price per unit, which is we call $32 here. Product E, we have $28. Product F, we have 22. Right. And then remove the less, we call deduct variable cost per unit. If you want, you can take this list down, and also if you want, you can take the total of this. Direct material 10, direct labor 6, variable overhead 4, 10 plus 6, 16, 16 plus 4, 20, minus 20. Under E, 8 plus 4, 12, 12 plus 2, 14. F, 6 plus 4, 10, 10 plus 2, 12. Right. Then we have a answer called contribution per unit. 32 minus 20 we call 20, 2 and 12, 4, 1, 14, 14, 0 and 10. Contribution per unit is there. The next we want identification of the limiting factor. No? So here we have a time in process A minutes 20 and all. So this is we call it, say this is a 20 per unit. So both we can say limiting factor resources, limiting factor resources. For the product D, we have 20 minutes per unit. For the product E, we have 25 minutes per unit and 15 minutes per unit. We can say, now you have to divide, no? So then now we can say contribution per limiting factor, contribution per limiting factor, 12 divided by 20, 14 divided by 25, 10 divided by 15. Now tell me what is the contribution per limiting factor. $0.6. 0.6 per unit. 0.56. 0.667. We can say 0.67. Then we can say 0.67. Yes. So now next we want ranking. We can see highest maximized contribution per limiting factor or highest profit maximization per limiting factor. We can say 0.6, this one, and this is the highest one. We call number 1 product F, number 2 product D, and number 3 product E. F, D, and E. Answer is answer. F, D, and E. How much? What is the answer? F, D, and E. Answer C. F, D, E. Answer C. So correct answer is answer C. Answer C. Understood? Clear? You got yes. Any questions, Nusra? Nuska? If not, let's do the next computation. So in the same question, they want you to calculate if a throughput accounting approach is used, the ranking of the products in order to priority for the profit maximizing profit mix will be. That means we have to apply the throughput accounting approach now. So let's do according to that and let's see what is the answer. So here I'm going to erase this. Right. Again, this is not the additional approach, which is we call throughput approach. throughput approach, right? Selling price per unit under product D, $32. Product E, $28. Product F, $22. Deduct the variable cost per unit. Here, we knew under throughput approach, only the real variable cost per unit is direct material cost per unit. Now, under product D, we have a direct material cost per unit, which is $10 minus 10. Under E, it is $8. Under F, which is $6. And then we can calculate throughput per unit. 32 minus 10 is 2. 3 minus 1 is 2. 22. 8 minus 8, 0 and 20. 22 minus 6, which is we call 16, right? This we call bottleneck time. 20 minutes per unit, 25 minutes per unit, and 15 minutes per unit. And then after, we have a throughput per bottleneck time. Throughput per bottleneck time. 22 divided by 20. 20 divided by 25. 16 divided by 15. Tell me, 22 divided by 20, how much? 1.1. 0.8. 0.80. 1.06, right? So then now we are going to rank the according to throughput approach. Highest is 1.10, number 1, number 2, and number 3. Answer should be DFE. DFE is given. DFE, answer D. The answer is answer D. Answer D. DFE. Answer D. So this is the completion of the throughput and contributions all together with the question. So done with that. Also, I wanted to, because there are no conversion cost related things and all, but here I just wanted to, ACCA computation is there. Question number 3 is there. Throughput accounting ratio. Throughput accounting ratio. The calculation of TA ratio. TA ratio is significant, yes or no? We have to say like that. What is significant? If the throughput accounting ratio is more than 1 or more than 100%, then we can say which is significant or not significant, which is not significant. Why? Throughput is more than the conversion cost. That means your throughput is available. Throughput is good enough to cover the conversion cost. It's like this. Gross profit margin, okay? Nah, not gross profit. Let's say one of the return, you have invested some particular money, ROI, and the investment your return amount should be higher. No? Another one, interest coverage ratio, you learn your profit before interest and tax should be higher than the finance cost. If it is more than that, that means you have a number of times. That means you can cover number of times its expense. It's the same thing like that. Here, throughput accounting means throughput is a good one. It is like a return, it's a contribution, like a profit. You have to have this much of highest throughput amount to cover the conversion cost. If it is below than that, which is significant, that means we have to more focus on that Why this throughput is not sufficient to cover the conversion? If the throughput amount is more than the conversion cost, is not significant. No need to put any effort. Why? You have a more than 100% or more than one. So let's do the computation. For throughput account ratio, there is a formula under page number 26. We can calculate throughput per accounting. Throughput account ratio can be calculated throughput. We can say another name, return value added or sales minus direct material per bottleneck time. That's a small thing. Throughput accounting ratio may, I think they have given something. Oh, yes. Small error has done in the printing in the page number 26. Nazca, can you turn the page number 26? I'm going to write the correct formula. Based on that, please make sure to change this available formula into the accurate level. So, right. Throughput, throughput, accounting ratio. We call TA ratio can be calculated. Throughput, throughput. In other words, we can say value added. We can say throughput, different name is their value added or return, return or selling price minus direct material, like that we can call. Throughput or bottleneck, bottleneck time or bottleneck resource need to be divided by conversion, conversion cost per bottleneck time or resource. This computation need to be multiplied with 100. The formula, right? This is in the same box. Here, conversion cost, we can include all the operating expenses like a conversion level 1, direct labor, variable overheads, fixed overheads, kind of all the factory related costs. Those are relevant to the, which is we call conversion level. Variable production, non-production, fixed production, non-production, all these things are general. That's why we call fixed overhead, production and non-production. That's why we call a variable overheads, production and non-production. All these things are relevant to the conversion level. This is the throughput accounting ratio. Right. Can you try to do calculation for the throughput accounting ratio based on the given formula? We have a question number 3, product D, product E, and the product F. D, E, and F. Can you try to calculate TA? We call throughput accounting ratio for this. DEF, throughput accounting ratio for this. Can you please try to calculate DEF, throughput accounting ratio for this? Right. Let's do the computation. Throughput accounting ratio, TA ratio. So first of all, we already calculated the throughput per bottleneck. So can you tell me how much throughput per bottleneck? We 1.10, 0.80, and 1.06. This is the one. And then we want to calculate the throughput accounting ratio by using the conversion cost per bottleneck time period. No? But which is we didn't calculate yet. Okay? We want to calculate that part. Conversion cost per bottleneck time. So here, I'm going to do this side because hope Nuska can see it's visible. Conversion cost per unit first. Calculate product D, product E, and the product F. D, E, and F. D, E, and F. D, E, and F. Conversion cost per unit. Under product D, we have a direct labor 6, variable overhead 4. Let's say 6 plus 4, 6 plus 4 plus 9. How much? 14, 10 plus 9, 19. Here, product E. You have product E, 4 plus 2, 6. 6 plus 6, 12. 4 plus 2 plus 6, which is we call 12. And F, we have 4 plus 2, again same amount, no? Yes. 4 plus 2 plus 6 divide, this is 12. So that conversion cost per unit is there. After conversion cost per bottleneck, conversion cost per bottleneck time, which is we call conversion cost per bottleneck time, which is we call $19 divided by bottleneck time, which is we call 20, and 12 divided by 25, and 12 divided by 15. How much? 0.91, 95, 0.48, 83. These are the conversion cost per 8, 0.8. 8. Conversion cost per bottleneck time. So now take those amount here. 0.95, 0.48, 0.80, 0.80. Right, done. Then throughput accounting ratio, we call TA percentage. This divided by this, how much? Into 100, how much? 115%. Very good. 115%. What about this? 167%. What about this? Hmm? 132%. Right. Now you can see all are above 100. No? Above 1. No? Actually, this is not significant. All are, we can recognize, not significant, not significant, not significant. Why? This throughput amount, we call throughput per bottleneck time, which is good enough to cover the conversion cost per bottleneck time under D. This throughput amount which is available is good enough to cover the conversion cost per bottleneck time under E. This throughput amount 1.06 is sufficient to cover the conversion cost per bottleneck time period in here under product F. Therefore, not significant. Not significant. So we are done with this. Clear? Yes, less than 100, no less than 1 digit called significant. That means why significant? We want to look at why this throughput amount has reduced compared to the conversion cost. Actually, throughput means a return. It's like a profit. This profit amount is not sufficient to cover the conversion cost. Why is that? Then we had to search that. What is the reason? Then we call it why is not significant. I mean, why it's significant? Not significant is not a problem. It means you don't need to put the efforts to look at this. Right? These are some of the MCQs received from the P1. So we, based on that, we predicted and we developed the questions. Can be, you can. Easy, can manage. Right. We done this as well. The next one, I explained already resource utilization rate, how to calculate, and maximum production units, how to calculate. Let's do the question number 2 now. Possible OTQ line number 2, question, page number 29. Page number 29, possible OTQ lines 2. A company produces 3 products using 3 different machines. The following data is available for the latest period. Product L, product M, and the product N. LMN. Machine hours required is there. Below they have given mixing machine, cutting machine, finishing machine, and then they have given the sales demand is in units. And then below this given maximum capacity is follow hours available. So now we have hours required, hours available. We can calculate. Now go to the next page, page number 30. Calculate resource utilization rate for each machine. Identify the key bottleneck resource based on machine utilization rate. Now we have multiple bottleneck resources. They want you to calculate and identify the exact bottleneck machine resource. Let's do the computation. You can start with that. Right. So here they want you to calculate the question. A maximum resource utilization rate under fixing, finishing, mixing, cutting, and finishing. Right. Mixing machine, cutting machine, and the finishing machine. You want to calculate resource utilization rate equal. We can write the formula we know. Total hours required divided by total hours available into 100. So here, under cutting machine, mixing machine, cutting machine and finishing machine, I'm going to calculate the overall RUR. That means by including the 3 products together under each machines. That is the RUR. So here, we have a product L, M, and N. I'm going to the mixing machine now. Under that, I'm going to first classify what is my resource required, total resource required for the L, M, and N. So here under mixing machine, in front of that product L, they want 2 hours per unit. M, they want 5 hours per unit. And under N, they want 3 hours per unit. And parallel to that, in below, they have provided the number of maximum sales units. We call the sales demand. So now, Under resource utilization rate, I'm going to use total hours required. L 2 into 2,700 units plus. Under M, 5 hours per unit into 5 hours per unit into 1,200 units. I'm still in the mixing machine now. Then plus under product N, 3 hours per unit into 2,500 units. Right. Now I have a total hours required for mixing machine under all three products. What is the total hours required under here? How much the total hours required under here? Hmm? Mhm. Yes. Yeah. Here we call total hours required for the mixing machine relevant to the all three products together. This is the common one because we want to calculate the resource utilization rate for the mixing machine by taking all three products. $18,900. Yes. 18,900. Yes. Total hours required is 18,900. Now, this 18,900 need to be divided by under mixing machine total hours available. What is the total hours available under mixing? 22,000 hours. 22,000 hours. Right. And the multiplication of 100. Right. Then hours required this much, available this much. Is good, not a problem. So let's see this RUR later. So then do the next computation for this fellow. Cutting machine. Cutting machine, again, you have a LMNN. Resource required here. So cutting machine 3 hours per unit into 2,700 plus 4 into 1,200 plus 2 into 2,500 divide by sorry, First of all, tell me the total hours required here. How much? Hmm? How much? 70? 900. 17,900 is the total hours required under the mixing machine. Sorry, cutting machine. And also divide by the hours available, which is already given. Cutting machine 15,400. 15,400 is not sufficient now. Definitely, this fellow is out of the control. This fellow and the finishing machine should be there as a equal sign. We'll see. We'll see. Right. Then after that, we have to do the finishing machine part. Under finishing machine, total hours required, we have to calculate 1 hour into 2,700 plus 2 hours into 1,200 plus 2 hours into 2,500. Right. So what is the amount here? What is the amount here? Total hours required. How much? 10,100. 10,100 divide by total hours available here, which is 7,300. That is, I told you, this is also a problem. Into 100. Now, tell me the resource utilization rate for mixing machine. 85%. Okay, 85%. That means out of our control, no problem. What about this fellow? 116%, right? What about this fellow? 138. 138%, right? No logics behind that. Here, actually, we have a 2 bottleneck resources under here. This is not the bottleneck resource, no problem. In this scenario, you have a highest RUR given fellow is a finishing machine. Therefore, finishing machine is the bottleneck resource. So we want a one bottleneck resource for all the computation. So because we can't have a multiple bottlenecks for the throughput calculations, only one. This is the finishing machine. And fill in the blanks in the first one and the second one. Done. Yes, done. Shall I clean the whiteboard? Yes. Nuska, hope you complete with this transaction. Shall I erase the whiteboard? Okay. Thank you. Right. So then next is the calculation of maximum production units. 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 Here, we are going to do this computation in the different method. What is the maximum production in formula? Total hours available divided by hours per unit is the formula. Now we want to do it separately, product basis. We have a product L. We have a product M. We have a product N, LMN. And then we have a mixing machine, cutting machine, and the finishing machine. Under product L, M, N, relevant to the mixing machine, total hours available, which is common for all, this is we call 22,000. Here also 22,000 units, hours. Here also 22,000 hours. And here also 22,000 hours. Under mixing machine, hours per unit for the product L, which is 2. For the M, which is 5. For the N, which is 3. 22 divided by 2, which is we call 11,000 hours or units. 11,000 hours or units. 22,000 divided by 5, which is we call 4,400. 4,400 units. 22,000 divided by 3. 7,333 units, right? Yeah, we can say up or down mean. Yeah. So we will take the rounded off number because no need to to the decimal numbers. Let's say the whole number. That's it. Because number of units we want to do the computation. Otherwise, it's going to be 733 units. And then cutting machine, we have a hours available 15,404 product L, 15,404 product M, 15,404 product N. Right, L, M, N. Hours for the cutting machine taken, time taken per unit, which is 3. For the M, which is 4. For the product N, which is 2. So then now tell me 15,400 divided by 3, this divide by this divide by this. How much? 33 units. 3,850. 850 units. No? So here 7,700 units. So now finishing machine, we have hours available 7,300 divide 7,300 divide 7,300 divide. Time taken per unit, which is for the finishing machine, 1 hour per unit, 2 hour per unit, 2 hour per unit. So 1 or 7,3 over this, we call 7,300 units. 7,300 divided by 2, how much? 3,650. 3,650 units. Same amount. Wow. 3,650 units. Right. Done with that. Very easy. When you are working with the, or when you are producing the product L, This is the way now we want to select. We want to do like that. When you are producing the product L, you may record to use the mixing machine hours, cutting machine hours, finishing machine hours. When you are producing the product M, you want the mixing, you want the cutting, you want the finishing. When you are producing the product N, you want the mixing, you want the cutting, you want the mix finishing. This is like that. Now we want to do how to calculate the lowest maximum production volume given one by using the element or MM, CM or FM. So like that, we have to select the particular row or the column to get the final answer. So now see, when you are standing from the finishing machine, if you use a finishing machine, you can produce 11,000. You can produce the 4,400, here 73,000. What is my lowest maximum production volume? 4,400 units under product M. The product M. Also, if you do the cutting machine, 5133, 3850 and all, you have this fellow. I'm going to do something. I still not the answer. I want to show that. If you are standing from the finishing machine, 73, this and all, you have this kind of the things. Nowadays, you can say, sir, based on that analysis, we have a more lowest maximum production units given one. Therefore, this is happened from this finishing machine. Yes, we can select. What do you think about this? When you are producing the product L, you are using the mixing machine. What is, you are using the cutting, you are using the finishing machine. What is your lowest one, which is 5133? If you are using the product, producing the product M, you are using the mixing, cutting, and finishing. What is your lowest one, which is 3650? If you are producing the product N, you are using the mixing, cutting, and finishing machines. Your lowest one should be same one called 36. Now tell me, because then here, unfortunately and luckily, there are two answers. Therefore, we can. Some questions are not like that. Now tell me, uh, going with the row analysis or column analysis is correct. Go with the row or the column analysis. Actually, the correct way is to go with the column analysis. Because we did like that. Because to produce these machines are using. At this machine again, you are using this product. What product? Product is not a bottleneck, no. This fellow is the bottleneck, no. We want to stand from when you are producing the product, what is the bottleneck machine? When you are producing the machine product M, what is the bottleneck machine? When you are producing the product N, what is the bottleneck machine? We have to do like a column basis analysis. Based on the question, this can be varied. At that time, make sure to remember they want you to calculate the bottleneck resource from the available particular resource. Stand from that and work on it. Sometimes the questions can be varied, not like this, sometimes different way. So according to that, luckily we got 3 bottlenecks from finishing machine when you are producing the M product and the N product. Therefore, final answer also finishing machine. Why? RUR also gave the same answer. This also definitely give the same answer. Should be with similar process. When you are going with the RUR, should be like that. When you're going with the maximum production volume, it should be like that. So final answer is finishing machine. Done. Done with this chapter as well. The joint product costing part, I will do with the next new chapter. So anyways, modern cost accounting complete. Nuska, hope you understood. Any questions? Right. Okay. So then, no, sir, crystal clear. Wow. Thank you, Naska. Thank you so much for this. Right. Let's do the new chapter now. Because one of my past student came to. So other costing techniques, we can halfway we can put the tick because we completed that the only the joint costing is there. Can you Naska, can you mark the other costing techniques partly completed, like that kind of things, partly completed? So the balance part we are going to do. After that, we are done with this chapter. Entire chapter is done. Right. So now we are going to start with the new area called chapter number 4, standard costing and variances part 1. Standard costing and variances part 1. Standard costing and variances part 1. Chapter number 4, page number 31. Page number 31. Right. Now we are going to learn with the standard costing and variance analysis, which is already you completed in the CIMA foundation level exam. So this is you covered. But again, CIMA operation level subject P1, we call management accounting subject. Your examiner wants you to do this computation here again. We call brought forward knowledge. Majority people who completed P1, my past students, they said, sir, variance ganak somehow this is receiving, we can manage it because they got the fixed overhead volume variance ki, fixed overhead capacity variance ki, or material variance, like a usage variance like that. They got to some question. Some of them, they got the operating statement question to fill in the blanks based on the variance calculations. So here again, I'm going to start from the beginning. I hope you all are don't know any single thing about the standard question. From that 0 level to again 100 level, I'm going to teach you all the variances, which is we call material variance, labor variance, variable overhead variance, fixed overhead variance, sales price variance, sales price profit variance, that's sales volume profit variance, sales volume price variance, sales volume contribution variance. So like that, we are going to learn the formulas, basic formulas, variances. Under material price variance, under material variances, material price variance, usage variance, and total material cost variance. And then, which is we call 3. I'm going to count you how many variances we are going to learn. I can show you material variances. We are going to learn material price and usage and total material cost variance. I will do one by one. This is I want to show you the number of count. Number 2, number 3. And under labor variance, we are going to learn labor rate variance and labor efficiency variance and labor idle time variance and labor total cost variance. So like that, 4, 5, 6, and 7 altogether now 7 variances. And then after that, we are going to learn the variable overhead variances. Under that, we are going to learn variable overheads, total cost variance, variable overheads, expenditure variance, variable overheads, efficiency variance. So like that, 8, 9, and 10 formulas are there. And after fixed overheads variance. Here we are going to learn mainly fixed overhead, total cost variance, fixed overheads, expenditure variance, fixed overheads, volume variance. Under that, we have a sub-variance is called capacity variance and the efficiency variance. So, 10, 11, 12, 13, and 14, and 15 variances formula. And then sales variance. Under that, we are going to learn selling price variance, sales volume, profit variance, sales volume, price variance, sales volume, contribution variance. So 13, 14, 15, 16, and 17 variance formulas we are going to again recap from the past. You learned in the past foundation level these 17 formulas. Again, we are going to start from the very basic to advanced. With the very basic question. First, I wanted you to familiar with the formula. I will teach you how to remember as well. And then after, I'm going to do the very big computation, which is the CIMA P1 history, the very difficult question, but now is easy one because you after that. With that question, I'm going to train you again. Then after that, I'm going to prepare operating statements along with that. Then after that, I'm going to start with the advanced variance, which is relevant to the CIMA P1 module. Advanced variance under that. Again, then after you are going to learn under advanced variances. Under advanced variance, you are going to learn we call mix and yield variance type. So material mix variance, material yield variance, and then after that you are going to learn this is the 17, 18 formula, 19, and then after that you are going to learn sales volume quantity variance. We call sales volume profit or sales volume yield variance. Here again you are going to learn sales mix variance, sales profit yield variance. So 20, 21. Then after that you are going to learn the planning and operating variances. Under planning and operating variances, there are a lot of formulas you can develop, but here we can say 22, 23, 22, and 23. Altogether, 23 formulas are there. But planning and operating variances, they can develop by using one of any formula, they can link to the planning. One of any formula, they can link to the operational variances. Like that, you are going to learn big formulas. Here, I will train you how to remember. Actually, this is taking some times to complete. Very huge lesson. That's why I thought to start from that now, because we completed the first chapter, second chapter, third we completed part, because that one is very small area now we had to complete, and then now we are in the fourth chapter. So like that, we thought to do one by one. So I think this is the snap of that. Now, today I'm not taking that time 6:30 and all because I know I'm almost very tired now. So I thought to finish that early. So the next week Sunday, we are going to learn from the beginning to this 17 formula, how to construct the formulas without any hesitation. Until that, I will tell you, don't want to be memorize any standard variances here because I have a the one of the general 3 formulas for you to use. Then you can, based on these 3 formula, you can develop the one of each formulas. Therefore, no need to memorize. How? We have one called total cost variance. We call total cost variance. This total cost variance, we constructed the very general formula called standard cost per unit into actual units multiplied by this and then minus actual cost incurred. So one formula. The second one I'm going to develop, but don't worry, I'm going to explain that again and again. Every 17 formula we are going to explain, then automatically you can memorize. Any total cost variances relevant to each formula, you can apply this general and you can write their relevant name and you can construct. Then I will tell you in the next session, next week, why we are multiplying actual volume, what is this standard, what's the reason behind that. And then we have another formula called price or rate or expenditure variance. So which is relevant to the material price, labor rate, variable overhead expenditure, except for the fixed overhead. This can be used like this: standard rate per quantity minus actual rate per quantity into actual quantity. This is the general formula. Very easy to remember. Yes, excellent. Very easy. Third formula, we can construct usage, efficiency, or volume variance. So how we can do? Again, standard quantity per unit into actual volume or actual units minus actual quantity and multiplied with the standard rate per quantity or the hour or whatever. This is the general three formulas for you to construct all the 17 variances. We will discuss on this on next week Sunday at 2 p.m. So I gave the small snap about that snapshot. So you can take it then very easy to do. So don't worry about the P1. I will give that P1 to you this head with until the final sessions. I'm going to practice always with the questions and all because that's why I want to finish the syllabus early. Then practice tudes, practice questions, different papers we are going to do inside the class. Then you can, without studying, after done with the session, first book the exam and do it. No need to take the time. That is the method. So until the next Sunday, I'm going to one session. Good evening. Thank you so much for the participation and hope to see you all on next week again in the same time. And Nuska, thank you so much for your commitment in the online. Hope to see you on next week in the physical lecture session with my friend Sarah. So see you on next week. Thank you. Go safely. Good evening.